Welcome back to another episode on loans. This episode today is going to go out to my friends in the construction space because we're going to be talking about the nitty-gritty of construction loans. These are the go-to options for either building a new property or giving your current ones a major facelift. So let's get into it. First off, what are construction loans? Think of them as a short-term, high-energy financial boost specifically designed to fund the building of a new property or a significant renovation of something that you already have. So if you're looking to build new properties, this is going to be your go-to. You're going to be going into a construction loan. Or if you have a property that's demoed, fully gutted, needs a shit ton of work, and you need funds for it, these are going to help you with that also. Unlike your typical mortgage, you don't get all the money up front. Instead, the loan funds are going to be distributed out to you in stages as you get shit done. Now, here are some of the key features of construction loans. First off, you're going to have interest-only payments. During your construction phase, you're only going to be paying interest on the money that has been disbursed. This means that your initial payments are going to be lighter on your wallet since you're not chipping away at the principal just yet. So let's say you finished the demo on the building and that was one of your milestones, and the cost for your demo was $50,000. Then when you submit that progress to the bank, they're going to cut you a check for all the work that you've done, hence the $50,000. So then once they give you that $50,000, on whatever day, that's the day your interest is going to start accruing. So if your interest rate for that loan is, call it 12%, so the first month you'll be paying 1% of that $50,000. So your total loan amount is going to get released in installments. And in the banking world, this is going to be called draws. These happen as you hit specific construction milestones like we talked about. And a building inspector hired by the bank is going to come out to check out the progress before each draw is approved. So if you hit all the check boxes, you're going to get a check for all that work. If not, you're going to have to get all your ducks in a row before the bank actually cuts you a check for that draw. It's essentially like leveling up in a game. You hit your target, you get your reward. Next, these loans are short-term in nature, not like your typical conventional loans. You know, they're going to range anywhere from maybe 6 months to 18, maybe 24 months. And they could go longer, just depends on which bank you go with and what their appetite is. Now, once the construction wraps up, you've got a few options. You can pay off the loan, you can refinance into a traditional mortgage, or you sell the property. Next up, once again, I've alluded to the interest rates on construction loans. Given the riskier nature of construction projects, these loans come with higher interest rates compared to your traditional mortgages. And then lastly, the construction loans actually convert to a permanent loan. This is another type of product that banks offer. After you are done hammering out all these nails and painting all these walls, you can convert your construction loan into a long-term mortgage. And this smooth transition means you can shift from the construction phase payments to regular mortgage payments without breaking a sweat. That means you're going to be paying principal and interest. So you guys are probably wondering, why are construction loans so important? Personally, I think these things are a game changer for anyone looking to build from just scratch, if you have some land that you want to develop on, or if you have a property that is really in shitty shape and you want to revitalize the property to its former glory. This is going to help you do that, unless you have a shit ton of money in your pocket already where you don't need a construction loan. Construction loans are going to provide you the necessary funding in a manageable way, once again, with all the benefits that I've listed, and that IO piece, the interest only piece, is super attractive. And when you're in a construction loan, it lets you worry about the project rather than fucking around with the finances. But you have to remember that deadlines are very important here. You know, if you have a 12-month loan and you're on month 11, you're pretty much at the 11th hour and you can't really fuck around much more. So you got to make sure all your projects are in line with your expectations and the timeline of the financial projections. And that is a wrap on construction loans. They're essential tools for builders and big rehabbers, renovators, offering that flexibility and that support throughout the construction journey. If you're planning a big project, understanding these loans can make a super huge difference. Thank you for tuning in. Don't forget to subscribe. And until next time, Wonton out.